Greek stock market plummets as financial woes continue. Thank you for joining us for another Bank of Cardiff newscast. Greece's stock market plummeted by more than 20% on the first day of trading following a 5-week closure prompted by fears that the country was about to exit the Eurozone. The Athens stock index experienced its worst ever performance in the opening few minutes of trading, with banking shares, which make up about a fifth of the index, taking a beating. The overall banking index fell to its 30% volatility limit. Athens' performance was prefaced by the overnight fall in China's stock market, as the crisis there shows no sign of abating amid global concerns over slowing economic growth in the region. Stock markets across Asia continued to decline in the wake of this prolonged slump, with Japan's Nikkei down nearly 0.5%, Hong Kong's Hang Seng down 1%, and South Korea's Kospi falling 0.9%. Well, the Greek Prime Minister and his anti-austerity cabinet are thought to be looking to negotiate a recapitalization of the banking sector as part of any new agreement with Greece's creditors. Talks on a fresh bailout began at the end of July, with the so-called lending troika, comprising the International Monetary Fund, IMF, the European Commission, EC, and the European Central Bank, ECB, now expanded by the addition of the EU's bailout fund, the European Stability Mechanism. Well, the IMF has repeatedly refused to provide any new financing for Greece until the country institutes workable economic reforms and Eurozone governments agree a program of debt relief. Meanwhile, the Eurozone is supplying a €7 billion temporary bridging loan to help Greece stay solvent, including the cost of a €3.2 billion debt repayment due to the ECB later this month. Well, the Prime Minister has his own demons to face as he tries to convince fellow Syriza members of the need to institute the reforms he was forced to agree to in exchange for the much-needed financial support. Trading on the Athens exchange was suspended in June in order to staunch the flow of euros that threatened to hemorrhage Greece's banking system and lead to the country's inevitable abdication from the Eurozone. Athens has since agreed the basics of a bailout plan in return for hard-hitting reforms and budget controls. It's a fragile time still for Greece, with lingering concerns over political and economic stability. Traders had been expecting losses when the exchange reopened because of the uncertainty over the third bailout. Rumours that the government is looking to earmark €10 billion to recapitalize the banks is causing a wobble due to the predicted diluting of the value of existing shares. Greek banks are also showing poor profits and carrying bad debts. To compound the issue, the government and ECB have decreed that no extra money can be withdrawn by Greeks from their deposit accounts to buy shares. The European Commission predicts that the Greek economy will shrink by between 2% and 4% this year, which represents a return to the recession that has defined the country for too many years now. Well, with Greek manufacturing activity also at a record low, thanks in no small part to the enforced bank closures, liquidity and supply problems, it's hard to see how Greece can begin turning a profit once more. Join us later this week for another Bank of Cardiff newscast. And remember, all our newscasts are available on our website, bankofcardiff.com/newscasts.